All right, so I'm back with Fabian today. You guys did enjoy last week's show, so we are back with a full market update. We've got to talk about Bitcoin because it has started to break out a little bit. So we want to discuss whether this confirms that the bottom is in. I want to discuss also this tweet from Ansem where he says the crypto trade is mostly over. I think there's an interesting discussion here to be had around the current state of the altcoin market and where the big opportunities are going to be in the future and where the opportunities aren't. We're also going to talk about the AI trade, some big news that we saw from the White House, which impacts that trade as well as going through a bunch of the altcoin stuff in the market. Hyperliquid has a big unlock that's upcoming that we have to discuss. And yeah, I think we can just crack into things here. So Fabian, welcome back to the channel.
Yeah, thanks for having me. It's good to be back. Last time was fun, and I'm excited to do it again.
I think we should start by discussing Bitcoin. So if we look at the Bitcoin chart here, you can see that we're finally starting to form an uptrend. We've broken back above the range high level here on the H4, and we've also flipped the noodle, which is our indicator in the Discord. So in my opinion, this is the first set of constructive price action we've seen in a matter of weeks since the beginning of November for Bitcoin. I think a lot of people have started to now ask the question whether this means the bottom's in. So interested to get your perspective, Fabian, on this recovery, maybe some of the triggers behind it, and whether this can be the beginning of a move up or whether it's just another lower high before we end up coming back down.
Yeah, so I've said in the Discord throughout the past week that I personally am leaning towards the belief that local capitulation is in. And I say locally because, we could always retest the bottoms. And usually, the bottoming process is quite messy. It could take anywhere from a few weeks to a couple months with multiple retests. But in terms of capitulation, so we've seen through like many metrics now, signs of extreme capitulation that kind of culminated into last Friday and peaked there, which coincided with that bottom that we put in the low 80Ks range. And we're seeing constructive signs since then. So I do think that peak local capitulation is over for now. And we could get into, the different kinds of capitulation signals that we're talking about. But my outlook, like in a nutshell, is that we're more likely to test higher, maybe up to, call it like the mid 90Ks to low 100Ks range, before retesting that lows of, let's say, low 80Ks or even lower than that.
Yeah, I think there's definitely some evidence to suggest that the bottom is in for now. But what I did say a few days ago on the channel is that you still would want to see, from a fundamental point of view, some of the bearish headwinds clearing. For example, the MicroStrategy situation, which we're going to discuss today. For example, the OG whales selling. Those were some of the triggers behind this downturn for Bitcoin. You would want to see some of that alleviate from a fundamental perspective before validating that we're going to have a big push to the upside, but definitely conceivable in the short term, that we can come and fill this gap here at 95.
Yeah, definitely. And there's a lot of confluence of resistance lining up around there too. Like you just pulled up the volume weighted average price. I believe, based on, you're kind of zoomed in a little bit, but that looks like it's going all the way back to this multi-month range that we've had since breaking up from 75K late last year. And there's obviously the 50-week MA, which is just a little over the 100K mark. And then 100K in general is just like really big, like a big psychological level for people. So we could definitely see resistance there and mess around there a little bit, maybe come back down. Overall, though, I'm personally leaning constructive from here on out, let's say, going into like the first half of next year. I don't know. What's your medium-term outlook when zooming out over the course of, let's say, the next few months?
Yeah, I think there's a decent chance over like a 3-month period that the bottom's in. I also just pulled up a chart on the VRVP here. You can see it's not only on the H4 but also on the daily. Like, that's the key point of control on the chart. So I think that is a very logical level to come and retest. I think how we react to that zone will tell us a little bit. Like, if we just slam back down, shows you the market's not ready to recover and it could take a bit longer. If we, react decently in that zone, that could tell us a lot. Remember, in, markets and trading, it's all about the reaction to a level. It's not just about the level itself. So that will be a big watch. I think it also depends on the rate decision. Obviously, equities look quite strong overall. I think this has been buoyed somewhat by the fact that the odds have increased for a rate cut in December. Fabian, you think this is all but confirmed now that we're going to get a cut because I think that would bode well for markets, although I'm sure that's starting to be priced in already.
Yeah, so that was really the big macro shift that took place last Friday and put in that tangible bottom for equities and Bitcoin as well, so far at least. And I do think it's pretty much all but confirmed at this point. So if there's anything that we know about Powell's Fed, going literally all the way back like multiple years, I've personally been following markets closely for the past 5 or 6 years now, and he's always had a certain playbook in mind, at least during the time that I've been following him, which is to telegraph his moves before he does anything. So rate cut odds, or the market's implied probability of a rate cut, will usually converge to either 0 or 1, or very close to, like in this case, over the 80th percentile mark, before we go into the meeting. It's very rare that we go into a meeting and they're hovering somewhere around, like, let's say the 50-50 mark. And that's because Powell likes to telegraph his moves ahead of time. And so what caused the big repricing last week was we had a bunch of Fed speakers come out throughout the week and signal more dovish intent, that they're leaning towards a rate cut. And then something that's a little more kind of discreet, that flew under a lot of people's radars, but something that I like to keep an eye on, is this person called Nick Timmeros. He's a reporter with the Wall Street Journal, and he has his own Twitter account. And he's widely known in the industry as being the Fed Whisperer, or he goes by many names: Fed Whisperer, Nikki Leaks, the Fed's mouthpiece, etc. And all of that really comes from the fact that the Fed has historically liked to kind of leak their next move to him in order to get it out into the public as a way to telegraph what they're going to do ahead of time. And throughout last week, he was really strongly signaling on his Twitter account that the Fed is leaning towards another cut. They're leaning dovish, and even providing justification in terms of, what we're seeing in the labor market and stuff like that for a rate cut. So you put all of that together, and I think this is kind of, like the TradFi equivalent of insider information leaking out into the markets that caused the huge repricing up. So I do think we're going to get a rate cut.
Okay, and how do you think the markets will react to this? I mean, they've already started to react positively. So do you think it'll be priced in by that point? Are you looking at that as a major factor behind the market, or are you looking at like broader liquidity factors?
Yeah, that's a great question, right? Because it's exactly as you said. So the markets are already starting to price it in. I do think, first, it probably provides some sort of support or a floor for the markets going into the December 10th FOMC meeting. And so both for equities and especially Bitcoin, right? I have a hard time seeing, let's say, equities back to all-time highs now, or thereabouts, and a rate cut being telegraphed for the December 10th meeting, and Bitcoin going under 80K during that time span, right? So I do think it provides us with some support going into it. But the next big question from there is, number one, how priced is it when we get there? And we're just going to have to kind of assess that as we get there, right? If equities roll over again and start retesting their lows, then I'm less inclined to think that's going to be a sell the news event. But if equities are back at all-time highs or beyond, and Bitcoin's back around 100K, then I start to get a little bit more cautious, of course. And what I think will matter even more is the Fed's guidance, right? In Powell's speech after the rate cut, there is such a thing as having a hawkish rate cut. So they could cut rates, but issue hawkish guidance. And in this case, the justification for that would be kind of Powell trying to balance out the fact that he kind of alluded to them not cutting rates coming into this. So if they do, he might feel the need to kind of balance that out with maybe some more hawkish talk during his speak. So I do think that's a risk, but that's something we're just kind of going to have to take one day at a time as we go into the meeting.
What do you think of the equity strength here? Because, I'm looking at S&P. I remember a few days ago, everyone was, freaking out about this. It was starting to break down. Now it's on the verge of another breakout to take it to all-time highs. NASDAQ lagged a little bit as there's been some overvaluation concerns for Mag 7, but still pretty strong. Also experiencing a nice rally this week. What do you make of this this stock market move? And then also, how do you view stocks versus Bitcoin right now? Because equities, every single time they dip, they seem to recover really, really quickly. So this is already from the local low, like a 5% bounce on NASDAQ. And it's only dropped now from the recent high to the current level 3.5%. If you look at Bitcoin, okay, it's bounced quite a bit as well, but from the highs, it's down, 27%. So equities seemingly just don't want to dip compared to crypto and other asset classes right now.
Yeah, they've been actually kind of frustratingly strong. And I say that because I'll be honest, I'm a little bummed out that we didn't get a deeper flush in equities. It would have been nice. And I'm even talking as a bull. Like, I own equities into this dip for, a longer time horizon that I wasn't going to sell or trade around. Not only would I have liked to buy cheaper, but generally I would have liked to see some more kind of positioning get flushed out of the market, right? Like a little more froth get flushed out. And sure, like a lot of the speculative, high-flying retail stock names, they've come down a lot. The S&P doesn't do a good job of representing them because it's something like over 40% of the S&P 500 composition is actually Mag 7. But generally speaking, I would have liked to see a little bit more of a flush to give us a better base to kind of, start a new uptrend from this point on. But either way, we spoke about last week the liquidity issues in the market. I think that people are starting to look past them. My concern that a lot of the positioning didn't get properly reset yet means that if we do have more liquidity hiccups, from now until, let's say, Q1 of next year, so that could even be something like Powell giving hawkish guidance in the December 10th FOMC, then I do think the window is still open for like another dip down and maybe even one final lower low before the, final lows are put in the S&P. But in the big picture, looking out, 6 to 12 months from now, everything's fine, right? In terms of both macro, sure, we're seeing deterioration at the margins. We spoke about that a bit last week, but it's nothing to get overly concerned about just yet, I don't think, and especially into midterms. And then I think the other big kind of driving story here is also the fact that the government basically explicitly told the markets that they're going to ensure at all costs that the AI trade continues, and they're going to backstop it. And you pointed that out at the beginning of this, right? The Genesis mission. And on top of that, and I'll let you get into the Genesis mission and what it entails, but even like, I think it was 1 or 2 days before that came out, we actually had, for the life of me, I'm forgetting his name there, but David Sachs, right? David Sachs come out and post a tweet literally saying we cannot allow the AI trade and the US economy to go into a recession. It's kind of a matter of national security and importance. And David Sachs, for those who don't know, he's quote unquote the SAR, he's the appointed SAR of AI and crypto in the Trump administration. So that was very telling. But yeah, I'll let you get into the kind of Genesis mission stuff here.
Yeah, it's pretty crazy. But no, just to summarize the Genesis mission, it's basically an executive order which is going to be supporting the America's AI action plan. So this is, it stretches across a few things, but basically what you need to know is they're going to continue to invest in AI-enabled science to accelerate scientific advancement. I'm just going to read this part here because I think this is really important. In this pivotal moment, the challenges we face require a historic national effort comparable in urgency and ambition to the Manhattan Project. Pretty big statement. That was instrumental to our victory in World War II and was a critical basis for the foundation of the Department of Energy and its national laboratory. So I think we discussed this on last week's show last Friday, but it's kind of an energy arms race right now between the US and China is, to be honest, winning that race in terms of output. So the US is trying to step up its game. And I think this executive order is part of that. And obviously, as a second order effect, there's been speculation that this will help support AI industry as it increases demand for AI tools, AI products, and just greater emphasizes the US priority on AI. And given the fact that the entire stock market is propped up by AI, not hard to see why markets also reacted strongly to this, obviously alongside some of the rate cut news as well.
Yeah, exactly. And to be quite honest, it really is kind of a matter of national importance. I don't think that that's being underplayed right now by the US government. And so I do think we can expect, at least to the best of their ability, that they're going to continue to try to prop this up and keep it going for as much as they can, or as long as they can.
And it was also a big week for AI because it wasn't only this, we also saw some new models releasing. Actually, it's been one of the fastest, I think, periods in recent memory in terms of new AI models shipping. Probably the biggest one is Gemini 3. I put out a guide recently, go check it out, it's on my X, about how you can use it to research crypto. I really think it's probably the best multi-use AI in the market right now, whether you want to build your own like mini apps, whether you want to build your own like dashboards. I actually built like a portfolio tracking dashboard, which was much better than my Claude one. So I think there's so much you can do from a personal perspective using this that I'm probably going to do a video on this later. But yeah, it's been a pretty big week in terms of the AI developments. But is this a tool that you've been testing out yet? And have you used it for crypto?
Actually, yeah, both. So what I personally found, and I'd like to hear, how your experience contrasts to this, but I actually found that Gemini 3 is probably a little bit better than ChatGPT for like the general kind of everyday stuff. So, your daily searches, whatever. And in fact, it does kind of score higher than ChatGPT 5 across like most metrics that they score LLMs on. But what I also found is I tried using them for not crypto specifically, but actually equity research. And I found that ChatGPT 5.1 is still a little bit better, at least from my experience. So that was kind of interesting to me. I don't know if you've had a different experience when researching across both of them, or if that kind of matches what I found.
Where I found Gemini was superior is its tooling. So, the ability to do dashboards, to build mini apps. I released like a plug and play on how you can actually build like mini crypto apps using Gemini 3, like vibe coding, so to speak. I feel like that's where it's much better. I also thought its reasoning was a bit better. Its creative writing was better. I tested on some writing prompts. Crypto research, I think it's good for some things, but I still lean on Grok a lot because I like having the live news feed. So for things like tokenomics and hype unlocks, for example, and because when I'm researching day to day and I want to know about unlocks, I want to know what people are saying about it, and then I want to like compile tweets. So Grok for me is still my number one, probably for live research. But anything going a bit deeper, I think Gemini has been really, really impressive. I still like using ChatGPT for deep research though. So if it's a deep research project, like for example, and Perplexity is also pretty good at this as well. Like if I want to work out the correlation of Bitcoin to equities during market downturns for the last 5 years, because I'm anticipating some sort of market downturn, then Perplexity and ChatGPT I think is still better for the deep research. Or if I'm researching. For example, I was doing a video on MicroStrategy and the whole MSCI situation, and I did a prompt on MicroStrategy, what happened in 2022. ChatGPT for me did a better job at researching, but where Gemini's been good so far, and there's so many tweaks, so things keep changing every week, has been on building these apps and building dashboards and also on the writing front. But things change so much, like we've seen in the last couple of weeks. We've had GPT 5.1, then Grok 4.1, and then Gemini 3, which was the big one. Then we saw an OpenAI upgrade as well on the coding front. Then we saw the new Claude update as well, and then we got Grok 4.1 thinking, which is really good for crypto too, because it's a little bit more advanced and just goes a little bit deeper for your prompts, although it takes a bit longer. So yeah, I continue to use a lot of LLMs, to be honest. Like I use a mixture of Grok, ChatGPT, Perplexity, Claude, and Gemini. So it's difficult. It's pretty hard to like pull away from ChatGPT as a daily driver because like once you've kind of used it for a while, I think it becomes hard to move away from, especially because of the voice prompting. One thing that still annoys me about Gemini, and I really don't understand it considering they have Google Pixel, is how difficult it is to voice prompt. Like it has this stupid voice transcription where you say a few words and it like comes up on the screen live, but it misses words, falsely transcribes words, whereas ChatGPT lets you send like just an audio file and then it transcribes it afterwards, which I find to be so much better because I can, if you're like doing a prompt on like a big problem in your business and you want, another opinion on it, it's way easier on ChatGPT. So that slight friction for me keeps me reaching for ChatGPT more and keeps me reaching for Grok more, because I'm actually on X all day. But if a few tweaks were made, I think Gemini is actually smarter. So that's been my experience with the app so far, but it constantly changes.
Yeah, that's very interesting. I actually haven't tried the voice prompting for any of them yet. I'm kind of old school. I just type everything out. But I do
I
agree
only
on
voice
Grok.
prompt because I
Oh,
was like,
that's
I have a little
interesting.
beach out here, so I just
Yeah.
literally go down, I grab my phone, and if I want to tackle a problem or just brainstorm or do something creative, that's what I use AI mostly for creative stuff, not so much grunt work yet because the agents are still a bit unreliable. But anything creative,
Yeah.
brainstorming, strategy, I'll just walk up and down the beach and bring ChatGPT. And then what I'll actually do is I'll take the answer from ChatGPT because I can't transcribe on Gemini that well, and then I'll put it into Gemini and ask Gemini if there's anything that I'm missing. And sometimes it does a better job at like picking up on mistakes and blind spots.
Oh yeah, that's interesting. I'm gonna have to try that. I do agree though, FYI, I'm sure this is kind of like, off air at this point, but I agree on Grok being the best for crypto though, for whatever it's worth. I think a big part of that's also that they're the most integrated into Twitter. And Twitter's obviously, the
Yeah.
hub for like where the crypto community is, and so that's a big advantage it has.
I might just keep it in because I think some people are interested, and I'm doing more AI content, so makes sense.
Okay.
But I want to talk about two things. Firstly, I want to talk about MicroStrategy, and then secondly, I want to talk about this because this might feature in the thumbnail, maybe not, but could feature in the thumbnail. So we should touch on it, and I think it's an interesting discussion. But just quickly on MicroStrategy, I know we talked about it last week, but obviously some more speculation and rumors have come out about MSCI. Rand had a good video on it. He said it's clear at this point crypto is being attacked, and the weapon is the rating and index agencies. First, it was MicroStrategy attacked by MSCI. Now Tether's being attacked by S&P. I didn't actually see the Tether news. Did you see the Tether news today?
Yeah, actually, I kind of just glossed over it, but I think it was that the S&P had
Oh,
downgraded
downgrade.
Tether's credit rating just based on the fact, if I'm not mistaken, and you can correct me if I'm wrong, but based on the fact that their gold reserves were too high at this point, or you could call it non-cash reserves in total were too high.
Rand says, how do you downgrade a 4% over-collateralized stablecoin that is holding 5% of its assets in Bitcoin and the vast majority in UST bills and gold? The agenda is clear. So do you think this is like market manipulation or something more sinister?
I mean, look, I'm personally not a big conspiracy guy, at least most of the time, unless given like really strong evidence to think so. What I think most commonly, happens in this space is just that these rating agencies are very strict, and they kind of have to be. I mean, it's their job to some sense, right? And so they have been known to be very stringent on their criterias even before crypto. And so this to me isn't that surprising, personally.
Interesting that it happened just after the MicroStrategy stuff, though. But on the MicroStrategy front itself, do you think this MSCI thing is a real risk heading into January? Because it does look like there's a pretty strong chance that they are going to be excluded from the index, which could force some selling as well.
Yeah, it definitely could. And JP Morgan and Goldman Sachs put out some estimates on that. But I mean, in the big picture, I personally think it's a little bit overblown. So essentially, even if they are excluded from the MSCI indexes, um, the total amount of net selling on MicroStrategy is estimated to be somewhere in the $2.8 billion range. And $2.8 billion, it's not nothing, but in the context of all of the volume that goes through MicroStrategy, it's not trend defining, right? It won't change where MicroStrategy ends up in, let's say, 1 or 2 months after that, I don't think. And probably at this point in time, especially considering how much it came down, won't be a big needle mover. And I think the real threat here is that there could be up to, and this is quoted from, again, JPM and Goldman Sachs, they estimate up to $11 billion of potential sell pressure, but only if other indices follow suit. So let's say the NASDAQ 100, right? But at this point, we don't have any indication from them that they're looking to do that. So I'm not looking at that as like a risk, at least not just yet. So this isn't something I would personally play around when it comes to Bitcoin.
No, makes sense. I don't think it's tradable either, but it's definitely a watch. I think it's more of a headwind that, if alleviated, could see the market go higher rather than something that's going to dump markets, because this is already being priced in somewhat into the market. We have to assume that markets are relatively efficient. So I don't think it's that tradable, but potentially could be tradable to the upside. Want to go now to this tweet. This is one that went really viral for the first few hours until people started to catch on that he was A/B testing with his audience. But maybe that was just a cover up for some of the backlash that it got. But it was a tweet from Ansem. If you guys don't know him, I assume if you're on X, you do. But I know a lot of the YouTube audiences, it's a bit of a separate audience. So he's a very popular figure in crypto, and I guess was very, very big during the meme coin wave, especially. He has come out and said the crypto trade is mostly over. Value accrual will primarily go to stablecoins and TradFi companies using their own blockchains, Stripe, Coinbase, Robinhood, not 95% of this rubbish. Opportunities will mainly be in Bitcoin, privacy, hyperliquid dexes, maybe AI robotics, blockchain in 2027. Then 3 hours later, he did another post saying the exact opposite. The crypto trade is just beginning. Blockchains and smart contracts are superior infrastructure. Opportunities will be plentiful. Regulatory environments had never been better, and many crypto startups will unseat existing incumbents. I'm led to believe that this original post is legit, just because it's a bit too specific to think it's like a pure A/B test. And to be honest, the crypto trade can mostly be over in terms of like alts, while still being alive in terms of just beginning. But clearly, there's a little bit of algorithmic experimentation going on. Interesting to see that this one got double the likes of the other one, which just shows you that it actually could be like a counter signal that the majority of retail are now feeling bearish. But what do you think of this whole proposition, the polarity between the two?
Yeah, no, I do think it's interesting that the bearish tweet got literally more than double the likes. I do think, for whatever it's worth, it's kind of a bullish leaning signal in terms of sentiment. I don't think, though, that crypto Twitter sentiment drives Bitcoin price action. So, I'm not kind of like looking at this and being, Bitcoin has to go up because crypto Twitter is leaning bearish. I think now there's bigger players, out there. But in general, I think both are right, or both have semblances of truth. I don't think they're mutually exclusive at all. I do think, on one hand, 95% of, as Ansem calls it, the dog shit in this space, which I agree with, probably does trend down over time. And the real alpha or edge for people here is being able to find the 0 to 5% that bucks that trend and delivers some sort of real value over the next few years. So I think that's true. But at the same time, I'm actually personally more bullish than ever on the adoption prospects and the big picture of crypto and blockchain as a whole. I think we've reached what I call escape velocity, where there's no more going back. There's no, even if, let's say, 4 years out, Trump loses, or it wouldn't be Trump again, but the Republicans lose the election, Democrats take office again. We know that last term they were hostile towards crypto, but I think now it's become so embedded in the fabric of society, the economy, and technology that they won't be able to undo all of the progress that's being made. So I think adoption and progress in crypto is up only, but at the same time, I think you have to be more selective than ever, because people are finally starting to get tired of all the bullshit, all of the memes, all of the scams, and all of that stuff. And you need to look for the diamonds in the rough here that are going to benefit from that big picture trend.
I think it's definitely a consolidation of many, many, many assets, and many very speculative, into a smaller basket of quality, and also to the serious builders that are really, I think we discussed prior to the show, like a lot of the traditional companies that are now moving into crypto and using blockchain rails because it's so much more efficient, and the potential for that to also revolutionize equities and DEX trading alongside and for equities as well. So I think there's big opportunities. Out of his list here, what ones are you most bullish on? So we talked about Bitcoin. Clearly, we're bullish on a longer time horizon over Bitcoin. Privacy, I think it's interesting. DEXs, clearly that's a big opportunity. AI robotics. we know it's going to feature heavily at some point. It's just asset selection is difficult. That's the only thing, because it's very narrative driven. But what opportunities are you mostly looking at the moment to capitalize on? Obviously, I wouldn't say the crypto trade's over like this, but I would say it's shifted and the opportunities have shifted.
Yeah, it's kind of funny, isn't it, that crypto kind of came full circle back to its roots, right? So during the whole like 2021 cycle and even up to the past couple of years, 2023, 2024, there was still like a lot of the attention in the space was focused on all of these, how can I say, very speculative use cases of where blockchain might fit in. Things like gaming, things like social media, stuff like that. And most of them didn't really pan out, at least not yet. And, I do still have hope that we will find use cases within those different sectors. But what we've really come back to as an industry is where crypto began, which is literally fintech. It's disrupting the current financial rails. So that's things like the perpification of financial trading that we're seeing going on right now with perp dexes, tokenization of financial assets, things like stocks, even private equity, which is super interesting. That's something that Ventuals is doing right now. And all of those kinds of use cases, as well as privacy, right? Privacy was really one of those kind of core tenets that a lot of the early day crypto industry held in a high regard. And so we're seeing it come back to its basics. And I love that. I do think that all of those things are really strong use cases. And I'm personally the most bullish on the theme of how it's going to disrupt finance. So like I said, perpification and tokenization, but then also things like prediction markets. I'm bullish on all of those. I don't yet see, final note, I don't yet see exactly how crypto can play into the AI and robotics theme, apart from being just a financial rail that AI agents use, because I think that's the big one, right? So AI agents, they aren't humans, they can't KYC with banks, etc. They need permissionless financial rails, and that's blockchain. But apart from that, I don't really see that strong of a product market fit, especially with robotics, at least not yet. I'm actually curious to hear if you kind of see anything other than I do there.
Well, robotics, you have like the cloud infrastructure plays, like longer term, but there's probably like a 5 to 10 year time horizon on that. I think the big use case for AI in crypto is autonomous portfolio management and trading. So, if you were able to manage your entire on-chain treasury, so take liquidity from one pool, put it into another pool, DCA into this asset, automatically compound every 3 months into this asset, just by like voice prompting an AI agent, like that would be super, super, super helpful. And I think almost everyone would rather do that if they could trust the agent than manually log into exchanges and work out, oh, where's the liquidity on this DEX? Oh, but it's on this DEX. Okay, I got to buy it here. Like there's still a lot of friction. Oh, I got to get gas. I got to bridge. Like if you had an agent that could just do it all for you, I think a lot more people would even, onboard into crypto. So I think that's a very clear use case for crypto natives. Yeah, in terms of robotics, I think it's a bit longer term. And in terms of AI, like there's some interesting plays around training models as well. Like you have to keep in mind, blockchain can facilitate incentivization, which is pretty unique, especially with NFTs as well and nodes. You can't do this with traditional rails very easily. So being able to financially reward like millions of people for using a product, it's much easier to distribute a network with blockchain and then incentivize users with some sort of flywheel. So I think there's some interesting use cases around training models and AI data, and potentially those models can become cheaper because training could become cheaper, but it's all very speculative. So there's not really clear PMF yet. What I do know is that there's like definitely going to be overlap, because if AI's automating systems, the financial system is the biggest system in the world. So it's definitely going to have synergy with crypto at some point. It's just very nascent. I mean, the AI agent plays were probably a bit premature. Like when do they run? Like December, January this year? Like that's 11 months. These things take 11 years to fully develop. I still think we'll get some, really solid use cases in the next 1 to 2 years, but these things will take time. And the AI agent wave was a bit of a fad at the time in retrospect, but it'll come back with, real adoption, in my opinion, at some point.
Yeah, that's interesting. And on the AI side, to touch on what you said, I also actually see that as the next big kind of trend within the AI sector in TradFi as well. So within the equity landscape, up until now, it's been all about the infrastructure, right? The cloud providers, GPUs, whatever, Mag 7 type plays. But I think they're starting to get saturated, and going forward, the real alpha will be finding the disruptor apps that emerge from AI. And that could be the case in both equities and crypto. We could have disruptor apps in both of them. So I definitely think that's an interesting place to be looking over the next few months and even years.
I want to talk to you about some of the altcoins that you're watching at the moment. But before we get into that, it would be remiss of me not to remind people that it's our last day of Black Friday for the Mars High Club. So you have, I literally think, a matter of hours left. So maybe 12 hours at the time of recording this. Hopefully you can still get in time by the time it's uploaded if you're keen. But if you use code Black Friday using the link in the description below, you can get your first month for $99. It's the cheapest we'll ever offer it at our lowest price ever to date. Or if you sign up, I personally think this is even better. You get 23% off plus an extra 3 months. So you get basically the equivalent of 45% off a yearly plan, which will end up saving you a lot more money. I think over $1,200 over the course of a year versus going with the monthly. So I think the monthly option is a great discount for people to try it out if you're on the fence, or if you were in the group previously and want to see what's changed because we've introduced a lot of features, or if you want to commit and you're in a position to do so, then obviously the yearly is a no-brainer. But that's where Fabian has his channels as well. You've got your what have you got? You've got your Altcoin Alpha channel where you share all of your picks live. You've got your TradFi picks channel where you talk about more of your equity plays, market commentary, and this is something that's very unique, and we have this across all analysts. You can actually ask us questions. There aren't many Discords where you actually have a chance to ask the analyst questions directly. Like, you could see how diligent Fabian is. Like, he's answering every single question here on altcoins, on markets, like at pretty much any time. So I think that's pretty cool. And even aside from all the alpha, I think one of the best things is being able to ask questions and having a community there, because at the end of the day, markets are difficult alone, especially in a market like this where it's been, choppy and extremely rough for people. Being able to, be a part of a strong community will make your journey so much easier, and having that support network will give you a higher chance of succeeding. The saying in crypto, like your number one priority is to survive. If you survive, as a byproduct of that, over the long term, you should end up making money. And one of the things that's really important for survival is to stick together. So I'll leave a link in the description below if you want to join and take advantage of that offer. You've literally only got a few hours left, so good luck if you are taking part in that. Well, yeah, I wanted to finish this this video by just talking about some alts. So we discuss some of the verticals we're bullish on. I think we've come to the conclusion that Ansem is right in a way that a lot of the stuff in the space is vaporware, but the crypto trade's not over in terms of the fact that there's opportunities, and there's still lots and lots of opportunities, I think, longer term. But just to hone in on some of them, the Perp Dex trade is interesting. I did a video on this. If you want to go watch it, I went through why I think it's going to be one of the biggest narratives of 2026, due to the fact that, and I want to know if you agree with this, theory, Fabian. But what I said in the video was, what happens towards the end of a cycle. So let's assume liquidity conditions keep expanding and markets keep expanding. So S&P and Nasdaq. Towards the end of the cycle, what happens is people go from US markets into more emerging markets. That was my theory around China as well, and I know you had a similar one. And towards the very end of the cycle, they start to dial up the risk even more, and that's where you start to look at crypto, but also leverage. People tend to start really leveraging up towards the end of a cycle, and I think blockchain offers like the perfect rails to take on leverage, and it's why I think perp equities are still a significantly underutilized or underpriced vertical for these dexes. I know not a lot of them have it, but a lot of them are integrating it. Like obviously Hyperliquid added a few of the major mag 7s, but I know GRVT is working on something. I know Drift is working on V3. It's going to start coming, and I think there will be a point where I think we hit an inflection point, especially towards the end of the cycle, where people want to dial up the risk, where you might actually see volume for equities exploding on these chains. So I want to know if that's a thesis that you also have as well, and how you're positioning there.
Yeah, 100%. I mean, there's just such obvious product market fit between blockchain rails, so perp dexes, and financial assets like equities, right? You have number one, 24/7 trading. Number two, and yeah, sure, this is a gray area right now. Like, I get it. They're probably going to get a little stricter with the regulation around it. But for the time being, it offers a lot of people a non KYC way to trade any of these equities. Okay, it's an advantage for now while it lasts. And then you also have things like higher leverage, like you pointed out, as well as, and this is something that's less explored right now, but I think as the industry matures, it's a new value unlock that could come, which is the whole idea of like DeFi Legos and the fact that, let's say, if you bring stocks on chain and you tokenize it as a spot asset, so this isn't looking as much on the perp side, but more on the spot side, now that asset can actually be used in other DeFi protocols. Maybe you own a stock and you want to get yield on it, so you lend it out in Aave, for example, right? Things like that. These are all huge value unlocks. And so I do think the product market fit is very obvious. Like you said, I do think it's going to be one of, if not the biggest trend in crypto over 2026 and probably beyond that. And the way right now to position for it, obviously you have, a few tokens that can give you exposure. Hyperliquid's the big one. They have unlocks starting right now. I'm still a little bit wary around them, I'll be honest, but we'll see how that goes. I made a post about it in the Discord the other week, giving everyone a heads up about the unlocks. But other than that, I think one of the biggest opportunities is, one, look for new and emerging players in this space, because there's so much room for more. It's not going to be just one big player like Hyperliquid. There's more than enough room in this market for multiple of them. And you can farm a lot of them before the token goes live right now. Things like Lighter, things like EdgeX and Paradex and Extended, which you're showing on the screen there, Pacifica, etc. And some of these will be winners. And
also, I
now
spoke to GRVT the other day. They're pushing pretty hard. I think you'll see them shooting up the ranks as well.
Oh, that's
and
interesting.
They've got
I actually have to take a deeper look.
I don't even know if I'm allowed to say this, but they'll have a pretty cool multiplier system for you to be able to earn some points. So that's going to be one that I'm farming. But there's multiple. And you made a good point before the stream when we were prepping. You said that because the market's quiet right now and not a lot of people are trading, this can actually give you an advantage because you have less competition.
100%. Everyone's checked out, right? And it's funny because it's actually the vast majority of people, I believe, who left the space over the past month or two were actually perp traders. Why? Because the big 10-10 blow up on October 10th, it was a perp event. It was a mass extinction perp event. And so we're seeing volumes come down now because of that, like across the perp landscape. And what that means is literally you're accumulating a bigger portion of the airdrop, let's say, pie by farming these things now as opposed to before. And so that's an opportunity for sure.
100%. So I think keep your eye on it. It's a space with massive opportunities. I like ASTER. I like Apex because of their exchange ties. I also like Lighter. Obviously, their token isn't live, but entering is a different story. Like I went through this the other day. Go and watch the video if you want, because I did the exact technical setups. But you still have to be wary because the whole altcoin market is still a bit shaky. But there are some levels that if you got them, like on ASTER, back around $1, I'd be interested again. Apex is starting to come into that zone in the mid 60s. Obviously, a few other big launches to come as well. So I definitely think this is a sector to look into. Look, on my side, I think we can wrap it there. I mean, I think we've covered a lot of major things, and if people like it, we can come back next week. But is there anything else that you want to share?
No, I think that's good. That's pretty much everything on my mind too.
Yeah, I think these streams are good. If people like it, we'll keep doing it because we get to touch on Bitcoin, macro, big picture stuff, where the opportunities are. It's been a slow week, but some interesting developments, I guess. If you dig a little bit deeper, especially with the White House order, Bitcoin as well, starting to show us some constructive price action, and a few other interesting bits and bobs. Obviously, MicroStrategy, Tether news. So I think once a week we'll have plenty to talk about. It's just day to day, not much changes at the moment, but I'm sure that'll change at some point. Usually after a lot of
especially when the
volatility.
markets get going. Yeah. No,
We've just
100%.
had so much volatility, so you get compression usually. Like usually when you get a lot
Yeah.
of volatility, you compress and kind of chill for a while until there's another leg.
100%. Yeah. No, I'm also having, like, just on a personal note, like, I'm having a lot of fun doing these too, more than I thought actually. Like, before I was kind of hesitant to stream. I still don't think I'm a good speaker necessarily. I'm trying to work on that. And I still have a little bit of nerves always doing these things, but I'm enjoying it. So yeah, if it gets good feedback, I'm happy to keep going with it.
Well, cool. Thank you guys for watching. We'll see you next Friday. We'll continue the series, and remember, there's the Black Friday offer in the description. Come join, get access to my channels, Fabian's channels, and of course all the other traders: Paradise, Fabian, Doc, Surf, Morin. So you've only got a few hours left. I'll see you in there. See you guys next week.